Good evening. Ira Epstein of Linn & Associates with your market wrap-up for the evening. And we're here now on Tuesday, the 21st of July, 2010, about 6:10 p.m. Central Time. Well, an interesting day. The market paused in the XLK and the QQQ. They were down. Rotation took place, and you saw bids come into the SPY, the DIA, and of course the Russell, the IWM. Silver exploded, and tonight in the futures market, silver's up 98 cents at its high point. It might be higher than that as I'm talking, I don't know. But it looks to me like somebody or some entity got caught. And when I see a market is up as much as it was today and then it just jumps early on, I can't prove that I'm right. Maybe there's a piece of news I don't know something about, but often that's short covering. We'll see what happens. Meanwhile, gold acted very good, the gold miners acted good, and the dollar took a beating today at the hands of the FXE, the Y, and the British pound. So, interesting day. When we look at the XLK, the tech sector, there's nothing to be bearish about. This market made a new high for the whole move, so you're bullish this market. You're looking at a pattern on the swing line that has a higher low, higher high. That is bullish. When we stand here and we look at where the 18-day average of closes is, the market's over it. That means the bias is up. That's how I define bias. If you're over the 18-day average, upward. Under it, downward, right on it, neutral. Got it? Where's the resistance? I call it the upper Bollinger Bands. Now remember what a Bollinger Band is. It is an algorithm designed to keep the market trading within it 95% of the time. If you go and do counts for consecutive amounts over or under it, it's very difficult in the futures markets to get beyond 5. I've seen it up to 7 or 8 actually, but the norm is it doesn't get beyond 5. You can get a little bit beyond that in these markets, in your stock, spiders, and ETFs. It's just the nuances of how it works. But I go by the same theory. You're going to only spend 5% of the time above or below it. When you first hit that number, especially if you hit the key moving average, I'll call it that line in the sand. It's like a pinball machine reset. That resistance is live, and I think the pros, given the opportunity, they'll do just what they did. Today's high was 110.38. The upper Bollinger Band was 110.31. You finished the day 108.46. So you may not agree with my theories, but I do. That's what matters since I'm putting out the videos. You're overbought. So I have a market that's overbought, in an uptrend, hit the upper Bollinger Band where I think pros took money off the table. In SMH, this market made a run also, didn't quite get to its upper band. It too is in an overbought status, but both numbers today finished over 80. Both numbers were over 80 yesterday, not the day before. It needs tomorrow to keep both numbers over 80 for me to say the market's converted from being overbought to locking in a bull trend until that red line decides to get back under 80. Very important day tomorrow. Most times you don't embed, so we'll see if the market gets more of a correction. In the industrial sector, this is a big resistance area. The upper Bollinger Band and the 200-day moving average here. I don't see a pros trying to just jump and push this market through that. Now, you're also trying to embed here. Let the market play out and we'll see if it embeds. Right now, you had been in what we call a pipe. And the market is trying to push on this, getting it up a little further. And it's not quite what I term gorilla glue. Gorilla glue, it's another term I made up, is when the market just locks in on that upper Bollinger Band and every day hits it and keeps pushing on it in one direction. In that case, the upper one would be to the upside. In the energy spider, what did you do today? Well, the market got as high as 38.55. 38.60 is the upper Bollinger Band. You got darn close. If you hit it tomorrow, I look for the pros to step out of this trade. You've been in an uptrend. That's all that I'm looking for there, and you're overbought. Doesn't mean you can't go higher and that I won't be wrong, but that's what I'm looking at. QQQ, overbought. We know this market's super bullish. It's been what the whole stock market has been led off of. However, it's pausing. Let it finish out what it's going to do. It lost its embedded reading, never did get back to that 18-day average when it did it. It owes that. Doesn't mean it's going to hit it, but unless you get up through that high, it owes it. We'll see if the market wants to get down there. And O means to me that I've got it with a big thing on my chart notes, be careful of buying because it still could get down to that number. In the emerging market ETF, well, let's first go and see what the momentum's doing. Both numbers over 80, not over 80 on Friday. You need to get through that. Let's see what the market can do tomorrow. Most of the times you don't embed. Today's high in the market was 64.32. You missed the upper Bollinger Band by one tick. If you drop, look for first support at the 200-day average in gray and maybe the 18 after that. But if you get to the 18, you're going to break the pattern of higher lows because you'll be breaking through 63.03. The bulls have to make a stand here even without the 200-day average. Hit that and you've got a problem. GLD went to the upper Bollinger Band, and each time it's done it in the past, you've hung there for a brief period of time and then you've gotten a correction. Until that changes, I don't believe it has changed. Let's see if it does anything. When we get to, let's see if I can get this to work for us. There we go, the gold miners. Yesterday, it's action. If we take a look, the high 40.49, you didn't hit the upper Bollinger Band. Today you went to hit it for good measure, 41.62 high. You finished the day off at 40.91. You sold off rather sharply from there. I think the pros stepped out. I think they're going to buy again because you're embedding in the reading, and I look for them to come in lower, but I think the first challenge of a Bollinger Band is an out number. By the way, I don't show SLV here. You want to look at my end of the day spider videos. Go to our website, www.iraepstein.com, under research. You can see everything you need there about getting it. TLT, take a look at this, just sideways action. That's all it's doing. It's in an uptrend. It's interesting that the stock market's rallying as much as it has. It's interesting that the yields on Treasuries are not going anywhere on that. They're falling, if anything, and the dollar's in a state of collapse. Yet you're still not adding to yield here. Last euro currency, this is much more what I call the gorilla glue. Every day you're just hitting it. You just missed it by a tick or two yesterday. You're right back on it. That's powerful action. You can't tell how high it is going unless you do what's called price counts on it. And that's something that we offer in part of our free offers like you see me doing here. You know, a lot of you watch me because you like technical indicators. Well, we have guides put together with us and our good friends at Modern Trader that cover all these different headlines. And each one got a good written story and a lot of examples. We created a PDF so it's easy for you right there to watch it, read it, or if you want to save it to your computer, you can. It's two guides, each one about 23 pages long or so, and I think it's one of the best out there for what it is. And believe me, I scour the internet looking for these things, and this is the best ones that I have found, and I love them. How do you get them? It's free. Go to our website under free offers. It's right there. And remember, if you want to find out about my spider ETF video, I would do that. It's under the research area of our website. I'm Ira. You have a great day.